CDLX stock, Cardlytics Inc. It lost 53.41% in the session of the 2nd of November 2022. 4.7 million shares crossed the tape, which is above average, and it reached the new 52-week low. It says here, price reached a new 52-week low of $4.43. This has been the previous low of $7.08 by 37.43%. and is 95.44% below 52-week high of $97.21. And the folks at Motley Fool, they know why. It says here's why Cardlytics sank to an all-time low today, the 2nd of November 2022. Says the business trends are worse than management expected. So what happened? Shares of advertising company Cardlytics sank to an all-time low today at some point. And they're saying that the Cardlytics partners with financial institutions to track real consumer spending and offer advertising opportunities to marketers. The company is paid when consumers make purchases, and it splits the money with its financial partners for providing the data. In the third quarter of this year, 2022, Cardlytics revenue was up 12% year over year to $73 million, and its monthly active users, that is people making purchases through its financial partners, were up 8% to 185 million. However, management noticed a slowdown in Q3 and expects the trend to continue in the fourth quarter of this year, 2022. And then what next? Cardlytics management noted that it lost a large marketing client from this restaurant industry during this third quarter that just ended. That's concerning for a small cap company, according to the folks at Motley Fool. A small cap company with concentration risk, and in our own opinion, with no or minimal moat. For perspective, the top 5 marketers using the platform accounted for 29% of Cardlytics revenue in 2021. So that's a huge, that's a concentration they're talking about there. Top five marketers accounted for 29% of their revenue. That's quite risky, so, but I mean, that's how it is for them. Management said it had already known it was losing a large client this quarter. However, it made another statement that might be more alarming. They said they don't think they anticipated the broad slowdown that was coming to occur in the fourth quarter. Investors, according to Motley Fool, never like uncertainty, and Cardlytics management sounds pretty uncertain here about the near-term future. Management is guiding for $80 million to $90 million in revenue next quarter, which will be flat at best. In fairness, the fourth quarter of 2021 was a record one for revenue, so it's a hard year. It's a hard year-over-year comparison, but the company is clearly facing some headwinds. Okay. On an encouraging final note, Cardlytics has $138.5 million in cash and equivalents. The stock trades at just a premium to that. Therefore, it can manage to return to growth in 2023, and shares are trading at an attractive valuation. So yes, that's what they're putting out there. And we can see down here, the stock is definitely in a strong bearish trend. Yeah, it appears to be in a strong bearish trend. Shares are below a declining 200-day moving average, and the MACD is beneath a signal line. It's also lagging the S&P 500. Momentum is strongly bearish. The 14-period slow stochastic oscillator is falling as investors sell shares and drive the price of CDLX lower. Today's volume was heavier than usual. 4.724 million shares versus an average of 516,000 roughly shares per day during the last 12 months. The unbalanced volume indicator is bearish. The slope of the indicator is negative and suggests that there is a lack of buying interest. So all of these were in place before now. All of these were in place before this decline. So but it reached a new 52-week low, and we know what buyers do. Deep buyers, they always come back, but this is not they look for the opportunity, but it's not for the faint of heart. So what do we do? What do we do from here, given all of this going on here with Cardlytics? So we can see whether we can pick up this price that it printed above its 50-day moving average, and we bring it all the way down to where it is right now. And we have unfortunately we have projections that are very, very, very ambitious, but we're going to close it and use something different. Okay, we're going to use this peak of 17.27, and so that we can get reasonable projections, bring it all the way down. Okay, and we have upper projection of 7.61, 9.56, 11.26. So, and the 50-day moving average is roughly at 50-day moving average is roughly at 50-day moving average. Let's get it there. It is roughly at 10.40, and we have an upward projection of 12.72. So the probability of CDLX stock remaining, the probability of CDLX stock remaining below that 12.72 projection is 75.17%, and the probability of it rising above rising above its 50-day moving average or getting close to that 12.72 is not very high as well, 24.83. So based on what has been happening with the stock, there's no, even though we know it printed a new 52-week low, but the chance that it's going to spike anytime soon, based on what the data is saying, it's not very high. At least the chance that it's going to spike above its 50-day moving average, which is around $10 and some fraction, is not very high. It's not very high. It's around 25.83%. The fact that it's going to remain below that, at least that price, at least $10.4 is much higher. Okay, so it just to some extent validates that even if anything, it's going to be around 7.6, 7.61 and 9.56. Those are the sort of projections that are much more likely based on what has been happening, or based on the data it has of late. Okay, so see what you make of CDLX stock, and thank you very much for watching this video.